Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news that apart from fossil fuels, we're seeing a broad retreat in most commodity prices today. But first, even though the slip was small last week, American mortgage applications fell again week on week, taking this downward trend to 9 of the past 12 weeks. Benchmark mortgage interest rates fell for a second straight week. And April data for American durable goods orders came in marginally softer than expected. They rose 0.4% month on month to $265 billion in April, following a downwardly revised 0.6% rise in March. But they're now 10.5% higher than a year ago. This is a sign business spending moderated somewhat. But in a positive sign, orders for capital goods rose more than 14% year on year in a rising trend. And the release of the May US Fed minutes revealed that most of their policymakers judged that 50 basis point increases in the Fed funds rate would be appropriate over the next couple of meetings. They also recorded that a twist to a restrictive stance of policy may well become appropriate, and the timing of that shift will depend on the evolving American economic outlook. There is an urgency here that they want to recover lost ground as inflation has burst on them faster than they expected. But markets seem unconvinced of their commitment, especially as those same minutes hinted a late 2022 pause may be needed. And China seems to be going the other way, worried things are slipping into dangerous territory. In a huge teleconference attended by 100,000 local officials, Premier Li warned China's economy is facing the crisis of sliding out of a reasonable range, he said. For an economy as large as China, once the economic operations fall out of a reasonable range, it will take a long time and huge cost to bring them back, he is reported to have said. Meanwhile, President Xi is nowhere to be seen dealing with a growing economic crisis there. He is meeting with security officials. In Australia, the incoming administration is warning that their federal financial situation is worse than they expected. And with the RBA about to raise interest rates as inflation zooms, they're additionally constrained on their spending plans over and above their election promises. They are saying economic pain could be with them for some time to come. And the US Treasury 10-year yield will start today at 2.75% and little changed. And the price of gold is lower today, down $14 since this time yesterday, at $1,851 an ounce. And oil prices are virtually unchanged today, still at $109.50 a barrel in the US, while the international Brent price just under $111.50 a barrel. And the Kiwi dollar will open today, little changed against the US dollar, now at 64.6 US cents. Against the Australian dollar, we're firmer at 91.4 Australian cents. Against the euro, we're also firmer at 60.6 euro cents. That all means our trade-weighted index starts today at 71.5, which is up 20 basis points from this time yesterday. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.